And welcome non-gang members and gang members to my video. Okay, I want to show you something that's interesting. Let me bring this back a little bit. Okay, when we had a crossover, you can see it right here in a minute. That's called a crossover right here. See the red through the yellow? That's called a crossover. That's a buy signal. But you got to make sure that you have green. So here was your green right here, $64, okay? So it came down, she dropped it a little bit, went back up. She had one little day here, but she stayed green. So as long as this guy keeps going up and stays above yellow, you stay with it, and you can see how easy this is. So we've had on Caterpillar, I'll redo it again to make sure, around, let's just do 60, say 60, this started at $63. $63 to $60. I mean 63 to 80 rather, 63 to 80. That's about a pretty 26% gain right here, 26% gain. Now, what's wrong with a 26% gain? Nothing. Now, here's the key, though. So let's do 26%. Okay, you got 26% gain up here. Now, the beautiful thing about this, obviously, you'd like to get in as early as you can. But the beautiful thing is your way, you don't have much time. All of a sudden, let's say you come in and you look at it's right here, and you see it's still green. You get in. Still right here, you get in. Now, the idea is try to get as close as you can to this guy right here. See this 33% line right here? This red line? Right there, 33. The idea is try to get as close as you can to 30, as long as it turns green. So when this crosses 33 and it's green, you're golden. You're golden. Okay. So that's the best place to get in. Okay. On a stock. That's your stage 2 of a stock. All right. But look how easy this is. Now here's the cool thing. It's crossed over. So now we take our profits because it's crossed. What we're looking for now is this, a red candlestick. Because see, this is crossed over. So we're going to wait. And then as this gets crossed over more, then we'll get another candlestick. Okay, like this. All right, however you want to figure it. And now you short, and then you just short it all the way back down. So you made 26% up. You can make, let's say, another 26% down or 25%. What is easier than that? Because as this comes down, it's so easy, people don't believe it works. Comes down, there he goes. And then you start all over again. When it turns again. Okay, now when it turns again, you could stay in one stock all year. That's all you need. Okay, there's the yellow line. She crosses above it. Turns green again, like this. Turns green, and then you buy it. As long as that red line has crossed over the yellow line. How easy is this? I'm going to show you one more quick one. Okay, just one more quick one. All right. Let's take a look at GDX. Look at that. Look at that. How simple that would have been. Look at that. Staying all the way up. Isn't that nice? Let's look at AU, or PAS, our silver, which is doing better than our gold. Look how turned green, and PAS green. And look at this. At over 100% gain in this. You just stay in the long screen. But here's the other key, though, is this. We're going to catch it on the way down. Now, why is that so important? Because, look, you got to make money, especially if you start late in life, right, for your retirement. A 401k mutual fund, you can't make money because, first of all, they buy a basket of stocks instead of individual stocks, a basket. So when you have a big basket of stocks, okay, you get a big basket of stocks, all right? The problem is that it's slow to move, okay? And the other problem with all these stocks in here, in the basket, okay, is not only is it slow to move, but you know, if the if you're in a mutual fund and a money manager wants to unload a couple of them and the values drop or the values go up, you got to pay taxes on it. That's terrible. Mutual funds are the worst. Okay, you want an individual stock so you can sell short. So when this starts turning red like this, you sell short. In a basket, you're not allowed to have an individual stock, like let's say over here, to short. You can't short it. Isn't that ridiculous? That's so stupid. You can't short it. So what do they tell you to do as it comes down? The mutual fund manager screws you. You don't know this, but he's trading. So you're losing money. He's making money. Isn't that ridiculous? Then he's telling you to cost average down. Why don't you buy some more at 12? It's a wonderful stock. Buy more at 10. That's ridiculous. So this is so easy to use. Check it out. Go to my site, philsgang.com. And again, join the gang. You'll have a lot of fun. And this PT2 is the way to go. See you in the church.